Bitcoin did not do the Bart Simpson, the infamous Bart Simpson chart pattern where we shoot up in order to go sideways to simply then crash down again. Now, what's the idea behind this? The idea is that somebody might manipulate the price to maybe liquidate some shorts, for example, to then afterwards sell again. And a lot of people were pretty suspicious of this rally since beginning of the year, because these rallies did happen during times of low trading volume, and they also happened very, very fast. So it was kind of clear that it was the whales that were pushing this all up. Let's look at this, right? This is here since beginning of the year. The vertical line that I'm about to draw here. So this is beginning of the year, and we shot up very, very quickly. And this happened basically when nobody was watching. When the US was sleeping, when Asia was sleeping, suddenly the price exploded. And so we went up, then we went just sideways for a while. But what then happened is, again, a new high. So we are now at 24.6K, and this is not what many people expected. Most people expected, since we had these artificially inflated prices, that they will come back down again. Now, I expected this. I expected that we are going to continue to rise here because we have seen something very similar in 2019. And I talked about this in a prior video. So when you look at these prior videos, right? 4 weeks ago, Bitcoin will not do the Bart Simpson. I talked about all of the logic behind this. I also then 1 week afterwards made a video, it will not do the double Bart because there was another rally happening, right? So why not add the double Bart here? I also mentioned, and let's revisit this, that the altcoins are likely going to underperform Bitcoin. So this is actually a Bitcoin-led rally, and we can see this very, very nicely. Let's go through all of those, right? Let's look at how did Bitcoin actually perform relative to altcoins. And let's then also look at the reasoning behind all of this. Like, how did I anticipate this, and what do I think will come out of this now? Are we now completely done with this rally? Are we exhausted? So let's go into this. Let's first look at Bitcoin relative to Ethereum and relative to the altcoins. So this is Bitcoin. Bitcoin so far since beginning of the year went up roughly 50% or so, probably not telling you news here. Here is Ethereum relative to Bitcoin. And Ethereum relative to Bitcoin went down. It also went down with this rally. So Ethereum is not outperforming Bitcoin, even though it might be a bit more risky, right? Let's now look at the altcoin market cap. There's a measure called Total 3. So Total 3 is the market cap of all of crypto except Bitcoin and Ethereum. Okay, so you take all of cryptocurrencies market cap, you subtract Bitcoin and Ethereum from that, you get Total 3. When you look at Total 3 and you divide this by Bitcoin's market cap, this is what you get. So here again, let's put this vertical line. Since beginning of the year, the altcoins underperformed. And this is not intuitive, right? The intuition would be when prices rise that the altcoins should outperform, right? In general, altcoins are more volatile. And so why don't the altcoins suddenly shoot up more when Bitcoin is going up? We do see that they underperform. So if you just have a random basket of altcoins, you did not make as much performance compared to if you just simply held Bitcoin. Very, very interesting, right? So why all of this? So first of all, let's look at these kinds of rallies. These rallies, they always happen very, very quickly, and they always happen when Asia is sleeping and when the US is sleeping, when trading volume is very, very low. So there seem to be large players that want to push up the price to the positive momentum side. Because if you're a whale, you don't want to impact the price. You might want to buy very slowly. You might want to buy in tranches, and you might want to buy when there's a lot of trading activity by retail happening that simply just buy and sell all the time, because they might be buying and selling within certain channels where they draw certain lines on charts, etc. So when there's more liquidity in a market, you tend to move the price less with the same amount of capital. When there's not a lot of activity in the market and you buy with a large bucket of capital, then you move the prices a lot. So this seems to be intentional. There seems to be intention by the whales to push it up. Now, the way I approach crypto is I like to take out all of the emotions from the equation. I like to, instead of just deciding on the fly, should I now buy and sell and just follow the news, etc., I like to establish rules beforehand of when I tend to rather be bullish and when I tend to rather be bearish. And one very simple way to do this is with moving averages. So I have been talking about this strategy for a very long time. If you watch the very first video on this channel, I was already talking about this. So let's look at the best moving average for Bitcoin. That's this over here. Okay, the vertical line again since beginning of the year. Since the 6th of January, or since the 5th of January, we were bullish according to this moving average. The idea is you want to be buying when the price is above the moving average, and you want to be selling or bet even on falling prices short when the price is below the moving average. And the idea is simply you want to be following the trends. Because historically, when you analyze this, you find out that crypto prices tend to move with trends. They tend to have some kind of self-reinforcing mechanism. When prices cripple up, they tend to accelerate and really shoot up. And when prices cripple down, they also tend to accelerate because there are liquidations happening, DeFi is deleveraging, etc., and then they crash down. So on both directions, you've got a reinforcement of the current price momentum until the movement is exhausted and things turn around. And you can simply just try to track this with moving averages, and you try to be in the market when things are bullish, right? When the price is above the moving average, and vice versa, when the price is below the moving average, you want to be betting on falling prices. Now, this is a very straightforward strategy. The question is, of course, does it work? And if yes, how well does it work? And then also as a refinement, what duration of the moving average should you take? Right? So let's take just here a moving average. Let's draw another moving average. Paint this maybe in red. Okay. And then you can see, I will now show you how actually the duration very much impacts the buying and selling signals. So let's take the 200-day moving average. Here, look at this. This is way further away from the price, and you would be selling much later when the momentum turns around. You would also be buying much later when the momentum turns bullish. So when you look, for example, here at the Corona crash, right? Let's go here into the Corona crash. You would have sold over here, so before the big crash, but also you would have bought pretty late when we've already went up quite a bit, okay, more than 66%. So you can then say, okay, 200 days is maybe too long. You can then reduce the duration, right? Let's reduce this. You will see how this red line now gets closer and closer to the price as I reduce the duration. So you tend to enter the market earlier when we go bullish, and you tend to exit the market also earlier when we turn around bearish. Now the issue is if you get too short with your duration. So let's maybe just put in, say, 15 days, or let's say 14 days, right? 2 weeks. When you go too close with your duration, you always buy and sell when we cross the moving average here, right? Every day you're getting in and out, and you would be buying high and selling low, and buying high again and selling low. So when it goes sideways, when the movements aren't very strong, you would always do a lot of bad trades, and you would also incur all of those trading fees. So there's an optimum. What's the best moving average duration? So you can backtest this. You can run a simulation of buying and selling and find out what would have been my performance if I used the 10-day moving average. What would have been my performance if I used the 20-day moving average, etc. You can run this kind of simulation for all kinds of moving averages over all kinds of time frames. And then you can find out what kind of moving average worked well for this particular year, what kind of moving average worked better for another year. And so let's look at some of those results, and let's look at how I came to this specific moving average and why I am bullish since beginning of the year, and why we all, right, in the premium membership and also in the public Telegram group, you can find this link down there, right? Simply search for Bitcoin Strategy Channel within Telegram. You will find the public Telegram group. You can also sign up for the premium one that's in the video description. I've been bullish since the beginning of the year because the price was above the moving average. And this is how I came to all of this. This Excel sheet, by the way, you can also download as a premium member. So what you see over here is on a logarithmic scale, the price of Bitcoin since beginning of the backtest. So we've got parts of the 2017 rally, we've got the entire crypto crash, then of course the rally afterwards, and currently the crash. You see in white the price of Bitcoin, and in turquoise you see the result of the backtest if you trade it according to the 43-day simple moving average. You bet on rising prices and you bet on falling prices, depending on where the price of Bitcoin closed relative to the moving average. The 43-day simple moving average is the best. So we backtested this using the 0.2% trading fees for getting in and getting out. So this is the logarithmic scale. Now this doesn't look that impressive yet because it's a logarithmic scale, right? One line over here is a 10x. If you look at this on a linear scale, this does look way nicer, right? So even though Bitcoin did do relatively fine during this time, the performance using this rule, this trading rule of the 43-day moving average is way, way better. Now, I said before that I backtested all kinds of moving averages, right? And that's actually the result of those multitude of backtests. On the x-axis, you've got the duration in days of the moving average. So I tested 1 day, which simply just means look at yesterday's price, was it below or above, all the way to the 52-day simple moving average. Okay, so that's the different moving average durations that I backtested. And what we see in black is the return you would have gotten if you just bought and held Bitcoin over the time. So that was 29%. Still fine, right? Still good in the grand scheme of things. Buying and holding isn't too bad. But timing the market, right? Trying to ride the waves tends to be better if you have the right duration. So you can't go in and out of the market too frequently, because when you do that, all these trading fees, they eat you up, right? If you have a moving average that's below, say, 10 days, you tend to be worse than just buying and holding. But if you've got a moving average that's longer than that, you tend to outperform. And the very best moving average here is the 43-day. Alternatively, you can also take the 48-day, right? It's slightly worse. But yeah, 43-day simple moving average tended to be the best in this period. And when we look at Bitcoin before the testing period, so let me look at when I actually started this. This backtest starts on the 17th of August, 2017. You can also do this backtest before that. I've done that. You get similar kinds of results. You get something around the 22, 23-day mark. That tends to be good. And then another moving average that's around the 43-day. So this is pretty much consistent over time if you take enough of a time horizon. So you should take at least 4 or 5 years of price data, because that's also how the Bitcoin cycle tends to move somewhat, right? You need to have some kind of bullish time and some kind of bearish time in it in order to get a proper result for the moving average. And this tends to be somewhat stable. So that's good, right? This means we can take the moving average that we determined today, and it's likely going to continue to stay somewhat relevant in the future. So that's what we get, right? The 43-day simple moving average. And this is why I have been bullish on Bitcoin, especially for quite a while. Now, when you do the same kinds of backtests for other assets, for example, let's take Ethereum, this was not always the case. So you see here how Ethereum temporarily went below the moving averages. You can also see how it tends to crash way more in the past. When we look at total 3, same thing, right? Again, the altcoin market tend to be below this. And so we can take the simple moving average. You can also take the best exponential moving average. I've also backtested those. We then come to the conclusion that Bitcoin tends to be more reliably above this SMA and the EMA. Ethereum tends to have more fake outs, and Ethereum tends to be more bearish over a longer period of time when you figure these signals. And so when we come to that, we then also see that Ethereum tends to underperform, especially when you look at the EMAs, not the SMAs. It tends to underperform. It's likely going to underperform in the next days and weeks as well. That's why you see this arrow over there. So that's how I came to all of this. And this is what we discuss in the Telegram channel, in the public one and in the premium one. And feel free to simply just join us there, right? We always follow the general macro. We also follow several altcoins. So I've done the exact same kinds of backtests for various altcoins. You can even download a script, right? You can download a script in the premium membership where you add this to your trading view. In case you use trading view, you can add a script there. Then whenever you toggle between the different altcoins, you will get the best moving average where I've done a backtest on that particular altcoin. So we discussed this as well. Currently, it's not really altcoin season just yet, right? As discussed. But once this turns around, and once it's not just Bitcoin that's leading the pack, but once the retail speculation comes back in again, then of course it does make sense to speculate more on alts again. So far, I am bullish on Bitcoin. I am less bullish on Ethereum and altcoins, but definitely do not take this rally just as another one-off, as in, this is just another manipulation game again, and we simply have to see the whales selling again. This is not necessarily what happens. Even if we do see short squeezes, it doesn't mean that the whales are selling. Bitcoin has relative certainty in terms of regulation. You can keep it for a long time without having to worry that it's going to get outlawed by the SEC, as might be the case for example, for Ethereum, because it's not proof of stake, and staking, at least on centralized exchanges, tends to become outlawed. So there is more regulatory risk with other cryptocurrencies. When you add more risk to your portfolio, you need to have the upside as well. And the upside usually comes from retail jumping on a certain asset. And so far, the retail sentiment isn't yet there. So that's the easiest way to currently make money, in my opinion. Simply just dollar cost average into Bitcoin, ride the wave, and get cautious once we get close to the 43-day simple moving average. Right, if you want to use this, right, simply go to tradingview.com. And if you're on a chart like this, right, once you opened Bitcoin, so you just open, Bitcoin in US dollars, for example, then press / on your keyboard and then enter moving average. Okay, add this, and I've already added too many, so I can't add one anymore. But once you add this, you see something like this on the chart. You double click on the line, and here's the inputs, and then you can adjust the length, adjust it to 43 days, press OK. That's it. You get the best moving average for Bitcoin. This is how you can time this. Okay, so hope this was valuable to you. Looking forward to see you in Telegram. Looking forward to see you in the next chat. And if you feel adventurous, feel free to check out the premium membership as well. It's currently $75 per month. If you don't like it right after the first week, simply just message me in that premium chat and I will refund you. Usually people stay there, right? The average subscription duration is like more than a year. So people do get out the value. So feel free to check it out. Looking forward to see you there and see you in the next video. Bye-bye.